I'm Nick Bamford, Executive Director of Informed Choice Limited, a firm of chartered financial planners based in Cranley, Surrey. Reason for this short video this morning is to take a look at the way in which the UK consumer pays for financial services. It's been a bit of a myth historically that somehow or other it was possible to get impartial, independent advice for free. And we suspect that's probably because the most dominant method of paying for financial advice historically has been through the commission mechanism. We don't actually think there's too much wrong with the commission mechanism, but we just prefer a different approach for our clients. Where commission is perhaps a little bit opaque, hidden away in a product, sometimes the consumer could be left with the feeling that somehow or other they've obtained that advice for free. As I said earlier, our approach is different to that. We want our clients to understand everything they pay for, whether that's paying us for the services that we deliver, or indeed paying a product provider or a fund manager for what they do. So transparency is a word that we find ourselves using quite frequently, and it's important in terms of the way in which we relate to our customers. We've adopted a four-step approach to make sure that we deliver really good quality advice to our clients. And we call that approach AIR. Actually, there are four letters, E-A-I-R. Engagement, advice, implementation, and then review. And I'll just talk you through how we charge for the services that we deliver in the context of that four-step approach. Unsurprisingly, before we can deliver any kind of advice to anybody, we need to find out an awful lot about them. So our engagement process, we hope, is a very gentle way of them finding out if we're the right kind of advisor for them to use, and for us to find out whether or not there's something we can do for our client. We invite our prospective clients to complete what we call a welcome pack. Basically, that's a set of data capture forms that allows them to put down in one place details of all of the different arrangements that they have, their income, their expenditure, their assets and their liabilities. And we always offer a first meeting without any cost at all to the client and without any obligation to them. That gives us an opportunity to really dig below the surface and find out precisely what goals and objectives our prospective clients have. And of course it also gives them an opportunity to ask us a lot of questions to find out if indeed we're the right firm for them to use to deliver advice to them. After that meeting, which as I said is without cost to the consumer and no obligation, we issue to them an engagement letter. And that engagement letter sets out precisely what we're going to do for them, and most importantly tells them exactly what they're going to have to pay to buy our services. The next step we move on to is the delivery of advice. We always deliver advice in the form of a written report which is presented to our client after we've carried out the research and analysis that you would expect us to carry out. We charge explicitly for the advice that we deliver, and we charge in the form of a project fee. What we've learned over the years is that an hourly rate probably leaves the consumer feeling that somehow work is going to expand to result in a particular amount of revenue to us. So we quote and stand by a project fee so that the client knows exactly what they're going to pay in order to get the advice that we're going to deliver to them. That advice may or may not lead to the recommendation that the consumer implement some kind of financial product solution. It may well be they already have in place absolutely the right products, and that all we need to do is perhaps recommend some slight changes, perhaps changes to the underlying investment funds that they have. But if they actually do need to start a new financial product, then you probably won't be surprised to learn that we charge a fee for doing that. And we express our fees in terms of a percentage of the amount of money that the consumer is going to invest. And typically that will be somewhere in the order of 1 to 2% of the value of the money that they're investing. The actual amount will depend upon volume, because we're quite happy, of course, to reduce the level of our implementation fees for those clients who've got significant amounts of money to invest. We call this the implementation stage, and it's about selecting the most appropriate products from the whole of market and making sure that those products are suitable for our clients. And the fourth stage is, of course, the review stage, and we're great believers that we want to have a long-term relationship with our clients, and be there with them, making sure that the advice we deliver remains suitable for many, many years into the future. And certainly one of the really good things that we've witnessed over the previous few years, particularly at times when there have been very difficult economic and investment conditions, is going back time and time again to deliver the reassurance and the education and the confidence that actually people should continue to invest. I guess what we're delivering there is peace of mind, helping people to understand that they're going to be able to achieve their financial objectives. So a 4-step process, 3 pricing points along the way, absolute transparency about what the consumer is paying, because we believe that is what they deserve. It helps us maintain a long-term working relationship with our clients. You'll find out more on our website, www.icl-ifa.co.uk, or simply give any of us a call if you've got any questions.